Hi everyone, it's me Chloe. Welcome to our Happy Trading Live channel and thank you for watching our futures crude palm oil weekly market analysis. Market moved lower as we expected last week. That market may face selling force with immediate resistance level at 6,700 before it resumed its uptrend. Our long trade initiated after market crossed above 6,485 and hit stop loss at 6,280. The reason of market drop mainly because traders profit taking from recent rally amid mixed expectations on production and export data. Let's have a look what other factors that impact palm oil prices last week. First, market expectations of strong shipments due to higher Indonesia export taxes as top producers Indonesia has set its May CPO reference price at 1,657.39 per tonne, while Malaysia keeps CPO export tax at 8% in May and raised its reference price 6,759.22 ringgit Malaysia per tonne for May. Latest news from Indonesia that President Joko Widodo said on Friday he decided to ban all exports of cooking oil and its raw material from 28th of April until the local shortage resolved. This may result big jump in CPO prices next week. Second, Southern Peninsula Palm Oil Millers Association that April 1st to 15 estimate production to raise 7% in line with market expectation, and more plantation workers will start their job in boosting up production gradually in May onwards, limited upside for palm oil prices. Third, strong soy oil prices and prolonged Russia-Ukraine war as well as capping the Black Sea sunflower oil exports make palm oil the main alternative vegetable oils demand. Furthermore, China is still the leading buyer for all crops despite purchases fell sharply during March, partly due to poor crush margin and higher domestic planted area. Fourth, weaker ringgit against the dollar to its lowest since June 2020, making palm cheaper for foreign buyers. Fifth, crude oil prices rally amid concerns about supply as the European Union mounts a potential ban on Russian imports. 6. Investors remain cautious about an increasingly aggressive rate hike outlook for the US as well as the fallout for the global economy from lockdowns in China. Let's have a look on our technical view. Doji or inside bar formed after long white bar last week, which indicates market forces remain uncertain and likely to have reversal. Second, stochastics show mixed signals as K lines crossing up from the level of 51 in weekly chart, which indicates uptrend signal, while in daily chart show K line cross down from the overbought level, which indicates sell signal. Thus, we expect selling force with immediate resistance level at 6,550 before it able to sustain for uptrend. Our suggestion trade for next week: short if stay below 6,150, target stop loss 6,344, target profit level, first target profit level 5,956, second target profit level 5,568. Long if stay above 6,625, target stop loss 6,431, target profit level, first target profit level 6,819, second target profit level 7,207. That's all from us. If you like our futures crude palm oil weekly market analysis, please like and share, and remember to subscribe to our Happy Trading Live channel. Thank you for watching. Happy Trading Live. Cheers.